Hello and welcome to another Major Market Movements Into the Week Market Review for July 10th, 2015. I'm Quad G, and in this video we're taking a look at the PM complex, starting off with gold here. This is a daily chart. Here's a trend line here that's been in existence since late in November of 2014. And if we zoom in on it, this is linear scale too, but if we zoom in on it here, you can see that we've had a couple incursions below that line, but the days have failed to close underneath it. And this is the kind of activity that's very tedious and tiresome, but I think it's very indicative of a market that is not in a big hurry to sell off, for one. It could still come down here, but the pace upon which it's moving to the downside is very choppy. And doing a fair job of cleaning up some of the manic drops like you're seeing here. This was a sharp move down, and then over the last 2 or 3 days here, we've filled that up. And I think you're going to continue to see this kind of slow, choppy action into August, maybe even into September. It doesn't make for really great trading, but I think it's the kind of attitude in the market that could eventually build up a good solid bottom for a major run to come in the weeks ahead. So not a whole lot to do right now, but in the near future we might have plenty to do and some really nice runs to grab a hold of and hopefully get rack up some nice profits. So the QG3 here still in a bearish alignment, though it's contracted just a little bit here. We do get the first daily close above the 3 EMA since looks like the last 8, 9, 10 days here. So that's an indication that this market may be done with the current move to the downside, and we may actually turn around here and give at least a moderate bounce, possibly just come up to test the 20 DMA. That's a possibility up here at about 1175. Which is very close to the last short-term swing high as well. So we'll see about that. Gold on the weekly, not overly bearish, certainly not bullish. Just kind of a neutral pattern there with this jab to the downside and then close right back up above the last week's low. So kind of neutral to bearish pattern on that. It is a lower weekly close, so that gives it some bearish points. But all right, EWO here. It's very possible if we back out here, we didn't get a positive divergence between these two swing lows here and here on this oscillator. Actually, what am I saying? This didn't fall to a new low there. Let me back up. I'm thinking about some other market. But we are, in this particular, what I wanted to point out to you here is we're very close to maybe tripping this bottom here. We might get a new lower low underneath this this March low. And with that, however, it may set up one of our first positive divergences in this oscillator that we haven't seen in quite some time. So that's one positive result that we could be coming into fairly soon. The RSI, same thing. If we get a dip below this last swing low, we could set up a positive divergence in this oscillator as well, though it's a little bit closer to the last swing low compared to the EWO. And also the 30 level is another key level of support, and we're almost there right now. We almost hit it here just a few days ago. It could be, let me zoom in on this. it could be trying to build up a positive divergence on the top side here with this move to the upside, comparing swing highs, short-term swing highs. So that would be if that was to happen, if we were to get a tick above this last swing low in the oscillator, RSI, the next move to the downside, which would produce a lower low, would likely set up a positive divergence on the bottom side as well in the short term, as well as a potential in the midterm as well, uh, from all the way back here in March. So I'll be watching for that. Gold weekly, MACD is open to the downside, and the daily is open to the downside as well, so that's still looking bearish. So overall picture for gold, still in this tedious neutral to bearish phase. Really not much to do with it right now. So I think it's, again, best to leave it alone. If we close below this trend line on a daily closing basis, that could invite a continued slide, possibly to new lower lows under 1142. All right, let's take a look at silver. All right, silver looking a little bit better than gold right now. It's had this strong sell-off here a few days back, and since then we've filled in the manic drop, but we closed the week solidly higher and also right up against this this midterm trend line all the way back from May. So there is a possibility of a reversal in this pattern right here. The QG3 is still technically in a bearish alignment, though it is contracted some. We could be coming up to test that 20 DMA fairly soon. You can see that the last few times where the market's tested the 20 DMA, it's only seen a rejection. So we'll be paying close attention to that. Silver on the weekly does close as a bullish hammer candle, as you can see. And let's see, last time we had a bullish hammer candle, well, we had this piercing bottom back here in November. Here's a fairly strong hammer candle on the weekly here, and that set a key low before a nice little run up. Same here, hammer candle on a weekly, and that set a key low before another little run up. So could this hammer candle be setting up a key low here? Absolutely, could be. I think it could give us at least, let's say, a dollar bounce, maybe a $1.50 bounce up here to test a trend line between these two highs here, which I'll get into in just a moment. So I think for silver, this might be enough of a bullish turnaround to maybe justify a long side entry, at least for a dollar, maybe $1.50 of movement to the upside. It could be more, but that remains to be seen if it has that much strength. All right, so EWO, let's see here. We do have a positive divergence between this swing low and that swing low compared to the oscillator, which is here and here. Okay, so we've got a lower low in price, all right, but we've got a higher low in the oscillator. So there is a positive divergence between this last swing low back here in March and this new one. So that's a bullish signal as well. Silver on the RSI. We don't have the positive divergence in the RSI like we do in the EWO. We have it to some degree if you stretch it all the way back here to the November low. Let's see, we've got a higher low in the oscillator compared to this swing low here, if you don't account for that manic sharp drop and reversal back there on in late November, you've got a very slight positive divergence there between those 2 points. And the MACD on the weekly is still open to the downside. That's bearish, and daily is slightly still open, though contracted quite a bit. So almost neutral. So overall picture for silver, I think there's at least a good chance that we could get a short little bounce to the upside, maybe over the short term, over only a few days before another reversal and move to the downside to set up a stronger positive divergence in the oscillators, possibly. So let's take a look at platinum. All right, so platinum is sold off this week fairly strongly. No robust turnaround like silver gave. The QG3 is still in a bearish alignment to the downside, though we do close above the 3 EMA today, which breaks the downtrend of the last few days. So this might be a signal that we're going to at least bounce up here for a little bit. Maybe come up here to test the 20 DMA. That's a possibility, which is also sliding to the downside. Also want to point out that there's good reason for our turnaround here too, based upon the fact that the 3 EMA, which is this red line here, you can see that it closed basically right at the lower Bollinger Band here and closed below here. And whenever you get that extreme of a condition where you get the 3 EMA closing underneath the lower Bollinger Band, there's a very high probability that the market's going to cool itself down and come back inside the Bollinger Band range. And I think that's what we're seeing here. Platinum on the weekly closing well below. We haven't seen this kind of low in platinum market since all the way back here in 2009. So we're into very deep territory here as far as retracement and covering ground over time. It's an indication that the market is likely in oversold levels. Platinum on the EWO, we still have our double positive divergence in place, as you can see, between these points. So as long as that's maintained and we keep this particular low in the oscillator does not move below the last swing low in the oscillator, this is a good positive signal that helps support a potential turnaround. Now obviously this isn't something that you want to trade off of. You'd want to zero in closer onto some shorter term signals such as a hammer candle or some kind of Elliott wave pattern to base a trade off of. But this does give you reason to be paying attention to this market, watching for signs of a turnaround to jump in on it, because the potential with such a long term, all the way back here in October of 2014, for such a long term positive divergence, you're going to very likely see a strong bounce up off of such a pattern. And that's the whole point of major market movements, is to find those types of trades where that are low risk, high potential, high probability trades. And this kind of lengthy daily positive divergence like this only piques my attention for a possible strong move to the upside and well worth chasing after. So, but as of yet, I don't see anything in the shorter term that would indicate a anything there that's reasonable to grab a hold of just yet for a trade. Platinum on the RSI daily, same thing. We got the double positive divergence, though this one's in the RSI, it's being threatened a little bit because this swing low is getting very, very close to this last swing low back here in March. Again, if we break below that, that washes out the double positive divergence. So it reduces the probability to some extent. And platinum on the MACD is still open to the downside on the daily and weekly as well. Still open to the downside, so bearish. So overall picture for platinum is still bearish, though we're in good territory to be paying attention to possible turnarounds in the price using candlesticks or Elliott wave patterns. All right, so let's move along to the Elliott wave charts here. Since the shorter term action in gold is not very exciting and there isn't a whole lot there for me to point out for you, I wanted to take a moment to revisit the long-term count for a couple different cases, the mega bull count and the mega bear count that I see. And the spike high back in 1980, which depending on how you measure it, it was a very sharp move to the upside and then very quick drop. And there was various recordings anywhere from 835 to 887, depending how you look at it from intraday or daily close, right around that range. I think a lot of analysis typically points to about 850 for the top, but whatever the case, we'll call it 850. I do think a major, possibly generational wave one was accomplished, was finished back in 1980, and then you had a long-term move to the downside, basically a little over 2 decades of correction for a major wave 2 sharp correction. And then out of that low in 2000, we saw this impulse up, which I think is a subwave 1 of a major generational 3. And we are currently working on a sub 2 of that generational 3 right now. And so if we see a major bottom take shape here coming up in the next, it could be as early as next month. It could go, I see the potential of it moving all the way into, say, 2016, mid 2016 before our turnaround for a major low for a wave 2. But once that's established, the mega bull count suggests that we've got a very strong wave 3 of 3 advance to the upside, which the price would go to levels that you can't possibly imagine. And you wouldn't want to imagine, because if prices are going to heights that you can imagine, or beyond what you can imagine, then the reality on the ground for that happening is probably not very good. There's something going on in the world that is not good. Whether it be hyperinflation or collapse of the fiat, monetary banking system, who knows what. So, yeah, if you're a gold holder, that would be really exciting, but scary at the same time. Let's move on to the mega bear count. This count I don't favor as much, but I do recognize it as a possibility. Except there's one very big condition for this particular count, is that a wave 4 here, so we got wave 1 here, pull this back, we got wave 1 back here, we've had a wave 2, wave 3, and now working on a wave 4. Wave 2 was sharp, so the expectation would be for some kind of flat correction. The way I have it drawn here, though it's still very early yet, is wave, and we're working on wave A here, which hasn't finished, and then I would expect a three-legged move to the upside for wave B that could re-challenge the all-time high all the way back up here into the 19,000 level or 1900 level. And then once that's finished, we'd see another leg to the downside for C of 4 for some kind of expanded flat. But C of 4, if it is wave 4, the wave action of 4 cannot move into the price territory of wave 1, which restricts the price from moving below this 835, 887, or the mean, which is about 850. The price can't move below that level or else invalidate that count. The reason that I don't favor this particular count is the fact that wave 3, as far as strength is concerned, is not as strong as wave 1 was. And usually, especially in commodity markets, you often see wave 3 uh, develop something that's far more lengthy, far more powerful than the original wave 1. And so it's one reason that I deduct points from this particular count because, I mean, you can just look at it. The amount of time it took to get from this bottom to this high compared to the wave 1 advance, which really started all the way back at $35 an ounce. It came up multiple times more in percentage terms, wave 1 did, compared to wave 3, which really only came up from about 250 to 1920. Not nearly as strong. So that's one reason I prefer the mega bull count over this count. But technically, I cannot write off this count. It is still possible. All right, so let's move on to gold in the shorter term. And we do have this blue trend line that's hovering way up here. Currently, it's above at about 1266, and once it's challenged again, it does give us the potential of a rule of 4 breakout. Regardless of what the LE waves are telling us, there's still the potential of a rule of 4 breakout there. But if we zoom in on this, we can see that the action is currently struggling with this midterm support line all the way back here from November 2014, and we're continuing to maintain a presence above that line. Haven't quite closed below it yet, so I think while we're above that line, I think there's still the potential for a little bit of a bounce here to maybe come up and test this orange trend line that's a little bit lower. Maybe come up here to 1189 or so, 1190 possibly. But I think this market is going to not get really excited until we get into the August, September months. If we continue to the downside in this choppy, indecisive movements, I think we will see some very decisive movements arise out of that August, September timeframe. So, well worth holding on until we get there. The trading from here to there just may not be worthwhile. Trying to jump in and out of these smaller moves. So we'll continue to watch and wait. All right, so here's silver, longer term count. Major wave 1 here, working on a major wave 2 as part of a double zigzag. We got the A, B, C, and then a drawn out sideways wave X, and then an A, B, and now we're working on a very choppy wave C to the downside, a 5-wave move with wave 1 an ABC for a wave 2 flat, wave 3 to the downside, and then a sharp move to the upside for wave 4, ABC, which you can see did not, it only kissed the wave 1 territory. And that's acceptable for wave 4 to touch the extent of wave 1. That's fine. And since then, I think we're working on a choppy, possibly ending diagonal pattern to the downside for wave 5. And we've got wave 1, wave 2, possibly wave 3 done this week. That certainly is a possibility. And we're working on wave 4 to the upside. Now, since wave 2 here looks sharp with an ABC move to the upside, wave 4 could end up being a long, drawn-out, choppy sideways move as a flat correction. That's a possibility. But once that's done, we get one more thrust to the downside for a final fifth of C of possibly 2 before a major wave 3 to the upside. So, well worth waiting for. It's just going to take some patience to get there. I also wanted to point out here that you see these labels here, fast and slow. One thing that you'll notice in markets, not just the silver, but just about any market really, is anytime you see a very sharp, manic, spiky top or spiky bottom. Let me move into this one here, right here. So we had this manic drop to the downside and a very quick reversal, and this hammer candle did produce a multi-month bounce to the upside, as you can see, filling in some of this manic drop. But the price eventually came down again to retest this low in a very choppy, slow move. So we have fast and slow tests of basically the same price level all the way down here at the 26. We could be seeing the exact same thing playing out right now in silver. Is we had that very sharp drop to the downside, which TradingView tested all the way down here to the, I think 13.99 was the number, and then it gave us a hammer candle and a multi-month bounce to the upside. So it could be the market's wanting to test this. It's wanting to know, is this for real? Is this some kind of fake thing? Are we being put on here with some kind of show? The markets do that all the time. So I think it's very possible this market's just going to come over here, round over. It's going to very slowly come down here and ask the question, is this bounce for real or not? And so I do think we could be retesting that lower 14, upper 13 level by the time this is all said and done. GDX continues to sell off, still working on a wave C of 2 to the downside, or another, I've got a alternate wave 3, alternate wave 4. This could be a sub 1, sub 2, working on a sub 3. We could get a sub 4 bounce and then another sub 5 to the downside. That's another possibility for some kind of ending diagonal count as well, similar to what silver's doing. That's another possible count as well. But as of today, there's really nothing there to suggest that we're going to get a bounce. We just close solidly lower for the week. I do want to take a look at the GDX on the longer term scale. We're going all the way back here to 2008 low, which was at 1574. And again, this is very, similar action to we have a very sharp, fast move to the downside and bounce, and now we're getting this very slow retest of that low, which I think is going to form eventually. I know it's been a long time, and I did think that maybe we were going to get it here, but with a single double divergence or a single positive divergence here, but so far it just hasn't generated the energy to break free. So I think we could continue to see this market come down, maybe even test or even exceed, given an incremental low under the 1574 level. But even doing so, I think you're going to see the price. This is the RSI on the weekly here. You could see the RSI come down here to the 30 level, which is often a key level of support, and maybe bounce off of it, producing a double positive divergence with a new lower low in price here coming up shortly, possibly. So, again, another great potential here. I'm just going to have to wait a little bit more for it to materialize. All right. All right, Huey. This is the gold. Excuse me, the Huey gold ratio. Huey is a basically a gold miners index of what is it? 17, 18 different gold mining stocks, and you can see here that we are in unprecedented levels all the way back here to exceeding the 2000 low, which was a major bottom in the price of gold and the price of mining stocks before that major run-up. And so here we are again revisiting that level, even exceeding it. And so this is all telling me, yeah, we're developing another. This is another good area to be watching for a very major significant low, especially for the mining stocks. Since if you think about it, we haven't seen these valuations in stocks compared to the product that it's selling since 2000. Here we are 15 years later, and it's hard to believe that mining stocks are this low again compared to the price of gold. So my expectation is that there is still a major bottom out there in the PM miners. But again, we're going to have to just wait and watch for that turnaround to materialize. Okay, so that covers the PM complex for this week. I hope you all have a great weekend, and we'll be talking to you later. All right, adios.